All right, so today we're going to talk about how one single conflict can kick off this insane chain reaction, a perfect storm that sends shockwaves through literally everything, from the gas in your car to the code that's shaping our future. Let's trace the fallout together. And this is really the big question, right? How can a fight in a tiny 30-kilometer stretch of water threaten the entire global economy, your wallet, and even the future of AI? It sounds kind of crazy, but let's follow that first link in the chain and see how it happens. So it all starts right here, at what you could call the world's energy Achilles heel, the Strait of Hormuz. This is the first and honestly the most critical piece of the whole puzzle. So what is this place exactly? Well, the Strait of Hormuz is just a 30-kilometer wide waterway. But get this, the actual shipping lane for those massive oil tankers narrows down to just 6 kilometers. It is a tiny, tiny passage, but it's basically the most important artery for the entire world's energy supply. And when I say important, I mean the scale of our dependency on this one little strait is just mind-boggling. Almost a third of all oil that's shipped by sea, we're talking 30.7%, has to pass through this one narrow spot. That is a staggering concentration of risk in one tiny location. And look, this isn't just about crude oil for Asia. The impact is everywhere. Europe gets almost 40% of its jet fuel through this waterway. And India? India relies on it for a whopping 85% of its LPG. This thing has tentacles reaching every single continent. Now here's where it gets real. This is no longer some theoretical threat. On February 28th, 2026, traffic just stopped. It plunged 70% practically overnight. So this wasn't just a risk of higher prices anymore. This was a real physical supply shock. That artery we talked about, it got clamped shut. Okay, so the choke point is blocked. Who feels that shockwave first? South Korea. The country instantly becomes this perfect case study in just how vulnerable a modern industrial economy can be. So why South Korea? Well, it all comes down to one number, 70.7%. That is the insane amount of their crude oil that comes directly from the Middle East. And yeah, you guessed it, almost all of that has to pass through the Strait of Hormuz. That, right there, is what extreme dependency looks like. And this dependency creates what some are calling a triple threat. First, of course, energy prices go through the roof, hitting every corner of the economy. Second, their currency takes a nosedive against the dollar, which makes everything they import way more expensive. And third, because all their manufacturing runs on that energy, their exports suddenly can't compete on the world stage. It's just a vicious, vicious cycle. And we could actually put some numbers on this potential damage. One analysis shows that even at $82 a barrel, the country's GDP shrinks by almost 0.5%. But what about in a full blockade scenario? Well, analysts are estimating a potential 3% drop. I mean, that's a catastrophic recession, triggered from thousands of miles away. Okay, so we've seen the devastating impact on a traditional economy. But this whole crisis is also a huge test for the new digital economy. And it starts with the biggest question there is for crypto. Is Bitcoin a safe haven, or is it just another risky asset? I mean, this is the debate, right? The one we've been having for years. Is Bitcoin digital gold? Is it the thing that protects you when there's chaos and inflation? Or when things get really scary, do people just sell it off like they sell their tech stocks? Well, this crisis is the ultimate real-world test of that whole theory. And the answer, so far, is, well, it's complicated. You've got two completely opposite forces at play here. The bull case says, hey, war forces governments to print a ton of money, and that's great for Bitcoin in the long run. But the bear case is what's actually happening right now. The data shows Bitcoin is selling off hard, and it's moving down right alongside the stock markets. And you know, there's a pretty chilling parallel in recent history. Back during the Russia-Ukraine war in 2022, Bitcoin was already down 46% from its peak, and then it fell another 77%. Today, it's down a very similar 48%. It kind of leaves every investor asking the exact same question. Is history about to repeat itself? This crisis isn't just testing financial systems, it's forcing a moment of truth, an ethical reckoning in the world of artificial intelligence. The pressure of this conflict is making big tech finally choose a side on the role of AI in war. And the whole drama really kicks off with this shockingly honest admission from OpenAI CEO Sam Altman. He himself said his company's military deal looked opportunistic and sloppy. I mean, that one quote just sets the stage for this massive divide that's opening up in the entire AI industry. And that divide is it's stark. On one side, you've got Anthropic, playing the ethicist. They turned down a $200 million military contract because they demanded that ethical guardrails be built into the AI model itself. Then, on the other side, you have OpenAI, the pragmatist. They took the deal, but with certain legal limits, not those core model-level restrictions. This is a fundamental fork in the road for the future of AI. So what exactly did OpenAI promise? Well, they offered up these 3 red lines: no domestic surveillance, no autonomous command of weapons, and no social credit systems. But the question for all of us is, are these promises really enough when the pressure of a real conflict is on? Okay, let's try and pull all these different threads together. We've seen these shockwaves ripple through energy, economies, crypto, and even AI ethics. So where do we go from here? Well, the research basically lays out 3 very different ways this could all play out. So you've got your best case, right? A quick diplomatic fix. Then there's the base case, a messy, drawn-out partial blockade. And then, of course, you've got the worst case, a full blockade and a much wider escalating conflict. And when you lay it all out like this, the stakes couldn't be clearer. In the best case, oil prices actually fall and markets recover. But in that worst case, we could be looking at $150 oil and Bitcoin crashing below 48K. And notice the probabilities here. That messy middle, the base case, is seen as the most likely outcome, sitting at a 55% chance. Which really just leaves us with one final and, I think, crucial question. This whole crisis just goes to show how deeply connected everything is. Energy, economies, digital money, even the morality of our technology. So when a perfect storm like this one really hits, it forces every single one of us to ask, what truly holds its value?